Hello, everybody. It's the last presentation, I guess. I'm trying to get it short, as you are all tired all day. First of all, I wanted to thank our host today, my friend Enrique, and the ADFIAP Secretariat, ADFIAP Chairman, all ADFIAP members. Really thank you for having me here today, and congratulations for this beautiful event. I just come back from the Finance in Common Summit, which had place last week, but I didn't want to have rest, so I just took plane coming back from Abidjan, actually, to France for a few hours and take the plane back from France, spend 24 hours in the airports to be here with you today. So really, I'm glad to share these few words about mobilization and capital markets development in the development finance ecosystem. I'm going to be just brief on the first point. I wanted to share a few remarks on resource mobilization and then move on how to make operations approach on capital market development. First of all, on resource mobilization, and by listening to my fellow panelists, I'm sure that we agree on one principle, which is the role of the public development banks and the DFIs is to implement SDGs. I mean, all of you have mentioned the fact that we are here also to work on the Paris Agreement alignment in our operations and to promote just and green transition. So the mobilization purpose for development finance institutions is to unlock their own capacity of funding, right? So somehow it's kind of trading off our capital constraint where we can also move and mobilize more financing above our balance sheet capacity in order to implement what matters for the people and for the planet, implementing SDGs and fighting for climate and sustainable finance. So it's an accurate debate where we are right now challenging. I mean, the COP27 is coming. Last year at COP26, we all hear the criticism, which was, I mean, somehow concentrated on the multilateral development banks, specifically the World Bank, but it's for all of us. So if you look at in the 100 billion promise on capital, on capital mobilization for climate, in 2015, the level of private finance in this 100 million was higher than the level it was in 2020. That's a sign of the role we should play to keep mobilizing the private finance towards climate and towards SDGs. So our role is, I think, to reinforce the multi-stakeholder approach for financing climate, for financing biodiversity and SDGs, especially in the developing countries and emerging markets. By mobilization and our role as development finance institution is to improve our financial ability, our capacity to implement impactful thematics in an ambitious manner, I think. So the question is, how do we do it, right? So I think also it's a question on who do we do it with. So the mobilization in organizations I had the opportunity to see goes from the institutional investors. They are looking for an impact investor nowadays. All the asset managers, they are looking for green projects somehow also. So it's our role to develop places and conceive projects where they can bring their financial power also to invest. Also, there is donors. If you look at those super organizations, this morning, Jean-Pierre Marcelli mentioned the fact that we mobilize also from the European Union, billions actually. And many of you have mentioned also the work you are doing with the the GCF, the Green Climate Finance. And it needs, from our institutions to be more innovative. And someone said earlier, innovation is not just technology. It's also the fact that we can imagine new projects and a way to develop financial engineering in order to mobilize those resources. They are available. GCF it's billions, right? So, and it's our state's money somehow. So, keep developing in financial engineering and mobilize those institutional euro or dollars. Philanthropy as well. So, if you look at the ecosystem, you have Gates, Rockefeller, all those institutions. They are also looking to approach development financial institutions in order to have a joint approach and joint investment. That needs also from public development banks and DFIs to transform themselves and the way we are working to be more efficient, more proactive on the way we also implement projects, because that's what they're looking for. They're looking for impact and quick impacts, right? So it means that we have to also to adapt our own procedures somehow in order to mobilize those philanthropists and to co-invest for them in a local ground. So while we speak about those philanthropists, many times we think of the international one, but sometimes we can mobilize locally philanthropists, right? So even in the global south, you have also people willing to invest their own money they have accumulated through their career. By saying all this, the question still is how. I think there is two conditions to in keeping developing the mobilizations in our organizations. It's having a clear mandate for our governance and our boards on who do we mobilize with and how much do we mobilize, and what is the incentive for the organizations in going to mobilize this money. And I think this is a current challenge. We all should open clearly this discussion with our boards on, okay, I have my own balance sheet. I can mobilize our own balance sheet to take risk in this project, but what do you want me to mobilize more? And what is the leverage you are expecting me to invest in the human resource in order to keep mobilizing others alongside our own investments? So those are, I think, critical questions we should think of in the long term, in the long run as well. So the indicators to mobilize. How do we really, prove that we have mobilized? That is also, I think, a good question for all of the public development banks and DFIs. So while we invest €1 or $1 in a project, should we count the investment we have brought or the projects we have enabled? Right? So sometimes we don't even have to bring our own money, but we can enable other investors to invest in a project because we have made the ecosystem in the right way somehow. So moving to the other part of the questions on capital markets. So here I'm going to take just a short moment to also explain what does the French Development Agency specifically on that way. It's a threshold with 3 levels. The first one is working on access. The second one is when you have an existing capital market somewhere, how do you work on the transition, enabling more sustainable finance in this capital market existing? And the third point is how do you consolidate something already existing, but you are still facing challenges on climate risk and also sustainable finance. On the first point, on the access, with the respect of the capital markets financing, what we do in the French Development Agency is that we work on enhancing the financial management for our partners and our counterparts to allow them to meet the market standards. By saying that is how you help them to develop the auditing process, the governance and the ESG or the risk management in their own organizations. Because we all know to get to issue bonds, for example, you need to meet some requirements in order for investors to buy your bonds. So to meet those requirements, our role as DFI is also to help all other organizations, to meet those requirements in order for them to get access to the market. So it's also to support our partners' initiatives to access capital market by diversifying their own funding. Somehow, we all can do credit lines, right, sometime, but also helping others to diversify their credit lines by giving them technical assistance opportunities or investing in a new business lines like gender credit lines or green credit lines in order for them to have a sufficient portfolio where they also can issue sustainable bonds or green bonds or SDG bonds. So we have done that with TSKB and the BSA in South Africa or in Turkey. So in the second point I was mentioning, the transition, how do you support financial actors to promote sustainable finance model in their regions? By supporting initiatives to establish and operationalize their sustainable strategy. That means that you have also in front of you a company or a bank which governance and which management really wants to develop and implement SDGs. So that requires also to have other tools that are not financial tools, right? So for them also to have their own process in screening their own portfolio, accessing also tools where they can develop the sustainable screening on their own portfolio. This means also that you work towards greening a whole financial system, like helping by also developing how do you say it? Classes. I mean, but bringing knowledge somehow by sharing with a whole ecosystem and financial system in a country or in a region. The third one is consolidation, which means how do we strengthen an architecture of the financial system to ensure its stability. 2 points on that. Working with the local regulators to put in place market standards in line with international best practices, which means sometimes how do we implement a green taxonomy in a region or in a country. Financial climate risk modeling and stress testing, also all these stuff, I mean, somehow are needed by a government or regulator in order to also drive financial flows in his own ecosystem. Support the local and regional initiatives as well, where you have supervision entities that want by themselves also take a way in order to control more efficiently their own regional markets. So that needs also that DFI look at that and invest on that way as well. So those are not some investment where we can expect direct interest rate, or because many times it is technical assistance or grants you would give for helping the transformation on those ecosystems. So these are the main points I wanted to share with you. And just to end my discussion with you today is that, and Jean-Pierre Marcelli mentioned it this morning, we should keep collaborating in those aspects. While we have this discussion here, it's relevant for your region, but imagine this kind of discussion at a global level as well. That's why I think we should keep engaging in some groups, thematic working groups as well, where we can keep sharing knowledge, discussing our business models, and discussing our constraints and how we can also free our capital potential. So thank you very much.